Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we are going to talk about the in the money covered call. We're going to talk about using a weekly in the money covered call. Now, I'm going to explain that briefly as to what that is, and I'm going to show you my most recent trade that I did yesterday for next Friday. I believe next Friday is February 2nd, 2024. I have been using TNA over the past 3 and 4 months. Now, in my stock example, we're going to use the TQs, which is the 3X Leverage DTF to the NASDAQ 100, but I'm going to show you how I use TNA to generate over $1,000 a trade, and I put on multiple trades during the same week. In fact, last week we closed a trade, which was 1 week. We used 2,700 shares, generating over $2,100. Then I put on another TNA trade, which expires this coming Friday, February 2nd, and that's going to generate some $1,100. Now, before we get started, I want to remind everybody, if they go to my website, cptdashboard.com, I have free spreadsheets. And the free spreadsheet you want to grab is the in the money spreadsheet. This is the one that I'm going to show you here in a second. In fact, I'm going to tease you here with the trade that I'm going to show you. You want to go ahead and grab that because that is going to help you set up for a great in-the-money covered call trade. So go to cptdashboard.com, click get your own copy. I don't spam you, and I definitely don't sell you nothing. But you want to have that because you want to have the numbers in front of you. It tells you how much money you're going to make, how much downside protection you're going to have, and it also has calculators for your annualized return. cptdashboard.com, click upgraded dashboard. And hey, while you're there, if you're interested in upgrading to my membership, I absolutely send all of these trades to my members. In fact, I'm going to show you the real-time trade alert for the TQs. This is what the members get. You're going to get constant communications of all my trades plus trade alerts. And I think I'm going to do a video today on that poor man's covered call using 3M. Those are videos that the members get that you don't see here. Go to cptdashboard.com, get your free in-the-money calculator. And if you're interested, click on the upgraded dashboard, and I have a 1 free offer waiting for you. All right, I think I want to show you right off the bat the kind of money we're generating before we get to that TQs trade. And hey, if you have any questions, you can always feel free to type them in the comments. I look at all the comments, okay? So go ahead and type your question in the comments below. Hey, if you want to say something, maybe throw out some love to me in the comments. That would be fabulous. Always love getting that positive feedback. Now, here's the trades. This is all of my closed trades for TNA this year. We're going to talk about some specific ones, the in-the-money ones. But you can see I use TNA quite a bit. I believe it's trading in such a great range. We can use it. It trades in this beautiful range. Now, this is a 3X Leverage DTF. So what's going to happen? As the Russell 2000 small cap moves up and down, that index has a 3X Leverage DTF, and it's called TNA. And we use it all the time. You can see it's in a great trading range right now where we can actually get involved, and it only has a $20 window. You know, some of these stocks like Coinbase, I myself am in a Coinbase trade for which I'm down. We're trying to work it to pick up little crumbs as the position works its way higher. Not going to let that one go. But when it comes to these in-the-money strikes, I love using these 3X Leverage DTFs. You get max premium. So for a 5-day trade, we could pick up almost 1.5% on most every trade, cash on cash. And I'm going to explain that here in a moment. This trades in such a beautiful range for me because I feel if I get stuck with the stock down here in the lower part of its trading range, it will find its way back. It is an index, so it moves with the stock market. So right now, with a lot of good news in the stock market, it moved higher. Well, it peeled off a little bit, and you could see where it bounces right off of the Keltner Channel Mid. The Keltner Channel Mid being a stock's trading range. Absolutely love using the Keltner Channel because it does show that stock trading range. Wall Street looks at this as well. Anytime it's trading in the lower part of the Keltner Channel, that would be a more favorable time to get involved with a good stock. The idea here is that Wall Street will start to notice that it's selling off, it's more oversold than overbought, and we start to get a little bit of a rally. And then what we're looking for is it to bounce off that Keltner Channel Mid. All of this helps me decide when to get involved with the stock. See, that's the important thing. We want to pick great entries. If you're buying up here, that's not a good entry point. So buying at the top is not what we want to do because the stock market runs them up to sell them off. That's what they do. So you want to find yourself in a more favorable position. Use the Keltner channel to look at the stocks trading range. And what we try to do is find stocks that are trading in the bottom part. That's a great place to start. And you're looking that when it breaks that Keltner channel mid, that's probably going to be the next time it pulls back. And that's exactly what TNA is doing right now. Now, of course, it can fall to the bottom part of that. And we get that, right? Because it moves up and down, buying and selling. This thing is a 3x leveraged ETF to the index. So really all we're looking for is movement, and we're looking for those fat premiums. That's where the in the money strike helps us, because if we can keep our windows nice and tight, and if that's a 5-day window, imagine, here's your 5-day window on the chart, not a 30-day window where you have all of this volatility. We're looking at a super tight window, and we're going to go with 5 days. And if we could pick up 1.5% in 5 days, and we can do this maybe 2 or 3 times, because I'm not saying I can do this every single week. Hey, I'll take 1.5% every single trade. I'm going to show you how the TQs turned out to be a 1.5% trade, which expires this coming Friday. Now, this is actually a real trade. This is live right now. So here's the deal. I went ahead and bought 1,500 shares of the TQs, paid about $82,000, and when the stock was trading at $55.25, I gave somebody the right but not the obligation to take them away from me cheaper at $53. Well, the premium for that was going to be $3.05, $2.25 being intrinsic value. Nobody makes money on that. 80 cents is my time value premium, or the profit on this trade. 80 cents times 1,500 shares. That is going to be cash generated of $1,200 in this 7-day window. Now, that 7-day window includes a weekend. So it's really only 5 days. I put this trade on Friday afternoon. It's going to expire next Friday. This is 1.45% cash on cash. And as you can see, I sent this to the members. I want to make 1.2 to 1.7% on these weekly in the money strikes. We are using more volatile stocks like the 3x leveraged ETFs, TNA, TQQQ, UDOW, UPRO. I figure, hey, if we're going to play an index, let's go ahead and get some juice. If I'm going to play the SPY, I might as well play UPRO so I get that 3x leverage. The market's going to move as it moves. I might as well use a little 3x leverage to create more premium cash flow for my trades. See, I'm not worried if it goes up or down 3% like a lot of you. For me, it's the markets. The markets move up, they move down. I just add a little 3x leverage. That is not a recommendation for you because for a lot of folks, they cannot handle the 3x leverage action. So that is the setup for the trade, but I do want to show you the calculator because the calculator is super simple to use and anyone can create this calculator. I put it out there, so I do all the legwork for you. You go ahead and you plug in the current stock price, how many shares you're going to buy, you plug in the strike price for which you're going to give somebody your shares, and then you plug in the premium. Now, what it's going to do is it's going to break down and tell you what the intrinsic value is, or the money that nobody makes, but it shows you that time value portion and the money you would make cash on cash. And it tells you when you start losing money. This is my special in the money calculator because I have things here that allow me to cut and paste, and I can send this to the members before I do the trade. That would be a trade alert, and they get those trade alerts. If you want to sign up, would love to welcome you aboard. Let's take a look at why I picked the TQs for this particular trade, and let's break it down. So first of all, the TQs was actually down Friday. Now I like that because there has been a recent little rally. It seems to be bouncing off the top of the Keltner channel. So it's likely this thing could fall. So that's why when it was trading at 55.25, I picked that 53 strike. What I think might happen is that the NASDAQ, remember this is the NASDAQ, it's just 3x amplified. I believe the NASDAQ should pull back to its last resistance. And it's a short window. This is very tight. I mean, this is basically 2 months here. I see if the NASDAQ is going to sell off, which again, it could. I think it comes back to the last time it broke resistance. So with that said, I think 53 is that number using the TQs. Now, if it falls below 53, that's okay. I can manage this because the Keltner channel mid is about 48. So remember, I get downside protection of some $2.25. My new cost basis, if this trade goes south and they do not take my shares at 53, well, my cost basis is 53. So now, if the TQs falls back to 48, this is manageable because at 48, I can write a longer dated covered call on my shares using the same 53 strike and probably collecting some 5% cash on cash. So it's kind of like chess with me. We want to set up for not the current trade. We want to set up for the multiple moves or what could happen. We want to have a plan, and if that plan goes awry, we want to have a secondary plan. Plan number one, we buy the shares at 55.25. We then sell the 53 in the money strike. We pick up some 80 cents in time value, or $1,200 in this case because I used 1,500 shares. And if the stock were to continue to fall below 53, we know 53 is our new cost basis because they paid us the intrinsic value. So now what we're hoping is that if it does fall, it falls to the Keltner channel mid, which would be 48, and then I would write a covered call using the 53 strike, which makes my share purchase break even. But in that case, I picked up 80 cents on the front side of this trade. And if you noticed, I don't know if you noticed this, but I got stuck with TNA. When I bought TNA a bit higher, I went ahead and wrote a covered call. They did not take my shares. Having the shares, I went ahead and wrote an out-of-the-money strike when it was trading at 34.20. I used the same strike, the 35 strike, to pick up some $2,100. So you can see I got stuck with the shares here when I bought them at 36.59, used the 35 strike. Now, the very next trade, 35 strike again, picked up some cash there, and then on the final trade, as TNA starts to move higher with the rest of the market, the shares are taken away. And what strike price? 35. Knocking down all of that money, and the stock has gone nowhere. See, the power of the in-the-money strike is you get that downside protection. So when you do your very first trade, which when you set it up, books 1.5%, or in my case, $1,200 a week. Well, if the stock plays nice, it can fall a little bit, and then my next covered call is set up where I'll use my cost basis strike. In this case, for TNA, it's 35, and we can write and get out of the trade. TQs, it's going to turn out to be the 53 strike, and got involved at 55.25. That is going to be the setup for this trade, which is live. We pocket that $1,200. I would love to have my shares taken away at 53. We move on. If my shares are not taken away, I'm hoping it falls to 48. We can then write that 53 covered call, pick up another big premium, probably do 2 weeks so I can pick up a little extra premium, and we do it over and over and over again. You know, if you've been a part of my channel for all these years, I have been a 30-day covered call guy. But now, I'll tell you what, a lot of my trading is the weekly covered call. Now again, I want you to go to cptdashboard.com and download your copy of the In the Money Strike. I absolutely love using that. I use it every single day. Every single time I try to dial up an in the money covered call. This is how I generate some $1,000 a trade using the in the money covered call. If you have any questions, put them in the comments. I'd love to hear if you're using stocks for an in-the-money strike and which ones you're using. Let's get some dialogue going in the comments. I would absolutely love to hear your story. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.